Time for the word on Wall Street. Top investors watching your money this week. Joining me now, the Fitz-Gerald Group Principal, Keith Fitz-Gerald, Heritage Capital President and Chief Investment Officer Paul Schatz, and AmeriVet Securities Head of U.S. Rates, Greg Faranello. Thank you, gentlemen, for being here. Futures are higher this morning to start a new trading month. This as we look ahead to the August ADP report that comes out at 8:15 Eastern. Greg, what are you watching in the market right now?
Good morning, Dagan, and thank you for having me again. So obviously, our eyes are on the employment number on Friday. We are watching the Fed, obviously, very closely here, and we're also watching the data. So, we've discussed before, we do think the employment side of the equation is very important for the Fed here as we move into latter part of fall into the fourth quarter in terms of the taper conversation. But there is some concern, I think, more broadly. If you look at these consumer confidence numbers in particular, Michigan, yesterday's number, we are seeing variables in the marketplace, call it inflation, call it geopolitical, call it Delta variant, which is clearly impacting the demand side of the economy. So, for Friday, it's interesting. If we get a very outlier number to the upside, I think the market's going to focus on a quicker timetable for the Fed as we approach the September meeting. Clearly, if we get a surprise to the downside, meaningfully to the downside, I don't think markets are going to like that all that either. So I think a number at consensus, even slightly below consensus. I mean, I think the Fed has been pretty clear here. We don't need to produce 800,000 jobs a month for the Fed to continue moving forward on taper.
If all of these worries, you said geopolitical, what is going on in this country, if it impacts the COVID you were talking about, if it impacts the demand side, that actually would ease inflation pressures, would it not?
No, that's correct. And if you look at the Fed posture in general, certainly we see dynamics on the supply side of the economy, whether it's with materials or with labor. I mean, there's very little the Fed can do on the supply side. So in the end, if the demand side does continue to slow down here, certainly that could mean the Fed trying to drag this taper process out a little bit longer. Right. Interest rates stay low, which in general, as long as the wheels really don't come off on the economy, should be very supportive still for risk assets.
Paul, you're watching the extended unemployment benefits expiring. About 7.5 million people will be losing their unemployment benefits as of next week. What will be the overall impact on markets because of this?
I don't think it's a market-moving event per se. I think, look, we're 18 months from the real height, the peak of the crisis. Just like with the great financial crisis, the Fed stayed and the government stayed way too long. And they've created so many dislocations and imbalances in the economy. I truly believe in my heart of hearts, this was the shot across the bow that, hey, listen, maybe we could push through universal basic income. And this is the way to test it out. The bottom line is you can't have a quasi-capitalist economy and incentivize people not to work. And just anecdotally, just in my small neck of the world, I've seen a client who had 2 restaurants had to close one except for the weekends because they couldn't get labor. It's the same story you've heard all around. My landscaper at work, 25-person crew, can only run with 19. People call for interviews. They don't show up. You know the drill. The economy is no longer in a crisis. Frankly, since the third quarter of last year, it's been humming at records, really levels not seen since Reagan. So it's time for the economy, long past due. The economy's got to get off the heroin. We've got to get back to normal functioning economy. That may mean a couple of bumps and bruises, but no economy was ever created to have this ginormous safety net sitting up there, preventing people from getting back to work, forcing wage inflation, forcing dislocations.
Right. Well, that's what the Democrats.
September, we already got 31 states who have pulled back.
Well, that's what the Democrats want.
The data.
That's what the Democrats want. This $3.5 trillion spending package that they're looking at creates whole new entitlement programs that run far into the future. At the same time that we found out yesterday that Social Security, that the trustees say the trust fund will be depleted in 13 years. And in fact, the cost will exceed total income this year. But Congress isn't doing anything about that existing entitlement. Moving on to Americans are stocking up on necessities like toilet paper. again, over concerns about the COVID-19 Delta variant. And makers of Charmin toilet paper, Bounty paper towels are running their factories 24 hours a day, 7 days a week. Keith, you're looking at Costco right now. Why?
Well, we're looking at Costco for painfully obvious reasons. Every dollar has got to go further in the scenario that the Biden administration is creating. Inflation, as my colleagues have pointed out, is very real. It's certainly not transitory. And finally, if Delta variant, in the narrative I think continues here, if Delta variant continues to be COVID 2.0 and it does in fact slow the economy down, Costco is a logical beneficiary for every American who wants to make their money go further. So it's a very simple choice, very straight up. Even at these prices, I think it's got a long way to go.
Any other picks, ideas that play into the same thinking, Keith?
Well, there is. If we look at IDA and we look at what just happened with regard to energy, I think people are overestimating the move to EV. So I think some of the traditional energy companies like Chevron, for example, that are making investments in alternatives make a good case here because it's going to take us years, even decades, according to scientists I've talked to shift away from dinosaur juice, even if we have a perfectly fungible substitute tomorrow. So I think there's an extension. There's a continuum that's got to be played here. It's not all or nothing.
Keith, thank you so much for being here. Great to see you. As always, Keith Fitz-Gerald, Paul Schatz, Gregory Faranello. Gentlemen, have a great day.